Today, I sat down with Clint from Kalaya Capital to discuss his journey with Darwinex Zero and his vision and his plans for the future. Clint's Darwin ICBO is owned 4% off reaching Darwinian Gold and is one of only 12 Darwins that has received 7 monthly consecutive allocations month on month. So stay tuned as we deep dive Clint's history as a trader and look further into his system. Clint, welcome to the podcast. How are we?
Very good, thanks, Kieran. Yourself?
Yeah, very well, thanks. It's not raining actually, so it's a bit of a positive start to the week.
Absolutely.
What I want to do, I just want to dive straight in. Okay, I don't want to waste anybody's time. I want to find out about Clint. I'm sure our viewers want to find out about Clint. So just let's dive into a little bit about your background. Who are you? What's your experience in your career, personal life? How have you gotten to the place where you are today?
Wow. Okay. How long have we got? I will make it as streamlined and as quick as I can, but I'm sure that will probably still take a while. So let's go back to who am I and how did I get to where we are today? I'm an Australian. I've lived in London for close to 20 years. I came over fresh on a boat in 2005, and I remember the very first breakfast that I bought at Heathrow Airport, which cost about £15, which is what, 30 Aussie dollars or something like that at the time. And I thought, oh my goodness, I need to get a job very quickly. So yeah, Australian, born and bred. I started my professional career, let's say, with actually my mum and dad's, because they had coffee shops and restaurants and takeaways and all that good stuff. So, you know, we as children were in the back of shops from a very young age. And that, I think, has put me into a good position for a lot of things in my life. Actually, trading, there's a lot of things that have come out of that experience that come directly into trading, and we can get into that. So yeah, initially hospitality, and then I got into architecture. So my mum and dad said, right, it's time for you to get a haircut and get a real job. So I was like, okay, let's do some architecture. My dad studied architecture back in the day, so I was always intrigued by that. And studied architecture in University of Queensland, Australia, and finished my degree there, and then came to London. And I worked in various architectural practices. I initially got a job with a great design firm in the UK, and then started to work on bigger projects like Westfield London and Westfield Stratford City. And that was amazing to see things really, you know, get built and delivered, if you like. And then I got into the banking industry. So I worked with Lloyd's Banking Group for about 7 years, and learnt a lot about just the finance world and, you know, what it's the professionalism within that space. I mean, it was highly professional within Westfield as well, and all the companies I've worked with. Lloyd's Banking Group, I think I was probably at the particular age where I started to take in a lot of things that have put me into a good position. And then I got into tech as well. So I've run and grown tech startups from the ground up, and I've learned a lot across my professional career. And I think it's something where, you know, in this day and age, we obviously have such a diverse. You can do many different things, whereas I think in the past it was you just got stuck in one groove. But I guess across all of that diverse career, trading has always been in the background. So I met my wife about 14 years ago. We've got a beautiful wife, so lucky to have her, and we have 3 children together. And 14 years ago, when I met my wife, I had started trading. So I know I have been trading for longer than 14 years. And I first saw a chart when I was in a seminar, a property investment seminar. And I remember seeing, you know, just this time and price chart, looking at it, and my brain just started whirling, trying to understand, what is this? What is this space? So a passion for the markets began. And I then started to delve into anything and everything I could get my hands on. So whether it was a book, a course, a video, you know, any types, audios, whatever it was. And I started to investigate this space. I did in fact, the people who were presenting at this seminar, they were from Wales, and I ended up doing a course with them, going to their place and staying in Wales. And this was 10 years ago. I found one of the notes actually randomly of which I'd written following that course. So I've been really intrigued by the markets for over a decade, and working to develop strategies that provide longevity and investment opportunities. And I think if we look at the whole career span, one thing which has lasted with me from the minutes that I started working with my mum and dad in coffee shops and restaurants is processes and systems and methodology. And I think that my passion for that is actually the main passion that I can then see within the markets that we can apply as traders to generate profit. So I'll stop there because I know I can just keep bantering. And yeah, that's kind of how I've ended up to be where I am today.
No, it's a fantastic explanation, because I think you've come from such a diverse background of skills and I guess career choices as well, and being able to jump from one to the other, you know, going from architecture or into banking or into tech startups, and now, you know, trading and fund management. I think a lot of the skills that you build across that journey are like super transferable, i.e. the ability to handle pressure. You know, if you're looking in the architectural industry, you're always going to have deadlines, you're always going to have targets, and being able to meet those targets with the pressure on your back is a skill that, you know, even 14 years later or 10 years later, you can still translate that day to day in trading. You know, whether you're in drawdown or whether you're executing a position or managing funds, whatever it may be, the skills that you build throughout your career are so relevant now, even many, many years later. So I guess, I know you said you went to a seminar and obviously you met these guys from Wales, but what was it that initially piqued your interest, or how did you actually find out about trading? Because I can imagine, you know, 14, 15 years ago, you didn't have Instagram, you didn't have Facebook, you didn't have social medias, and the internet wasn't as accessible as it is now. And you couldn't just go and find some person, you know, talking about a chart and how they generated profit this week. It's a little bit more, I guess, word of mouth, would you say? Or
yeah, it's amazing actually when you reflect on how much the world has changed in the trading space just in that short period of time. You know, the markets have been open from the minute that they've been open. But I think in the last 14 years, what I've seen is, yeah, the social media space has provided a platform for people to just put lots of content out there, and it's hard to filter through that content to find what's right for you. I think that's the tricky part, because the trading space is such a broad, you know, it's so wide, but I think to achieve success you have to go really deep. You know, and that's the challenge, is that there's so much to choose from. In fact, from a strategic perspective, in terms of strategies, you know, I think it's almost an infinite way that you could, you know, look and cut and dice the market. So yeah, the world has changed. When I first learned about the markets, it was quite personal, as you say, word of mouth. It was, you know, we're in a seminar room. It was about probably 250 people in the room, and it just sparked my interest. The fact that you could generate profits from looking at a price chart and clicking a button. I think that was the first bit. And I think lots of people in the, you know, why do we trade? At the end of the day, it's to create wealth, it's to create profit. That's if you're not doing it for that reason, well, I personally, that's the reason why I focus on what I'm doing. So I think, you know, the seminar perked my interest in terms of, okay, this is an interesting way to create wealth. And then when I started learning about it through the books and everything that I came across, it just got bigger and bigger and bigger. You know, my excitement and my attention for it just became bigger.
do you remember what the first book was that you read that was on trading?
Actually, great question. It was Forex for Dummies. Yes, I remember.
Is that the one with the big yellow and black front?
Yeah, I was sat in somewhere near Green Park with a buddy of mine that we were doing property together, and he said, "What the hell is this?" I was flicking it through, you know, in the park. Yeah.
And I guess you walked away from that an expert, right?
Oh my goodness, I thought I was. Yeah.
So talk to me about the kind of beginning of your journey. Obviously, you go to these seminars, you're interest is piqued, you start researching the books and, you know, looking at websites and anything that you can. What was kind of the early stages like for Clint? Did you go full steam ahead? Did you slowly ease into it? Did you blow any accounts? Like, what was that first initial period of pain like for you?
Love it, love it. Great question. So I think actually at the same time that I started to learn about the markets, I had a buddy of mine who he had some inside knowledge on a company, and he said, you know, this is you should buy this because it's going to go up. So so I thought, you know, and it was all legitimate inside knowledge. And I thought to myself, okay, let's buy it. So we bought it, and the company went bankrupt. So I lost, I think, you know, £2,000 or whatever it was at the time, immediately, like that. And that was my first introduction to buying stocks of any sort. Then I got into Forex at the same time after reading the Forex for Dummies book, and I think I put in probably about, you know, £2,000. It was very quickly lost, very quickly lost. And I remember, I can still remember the feeling, the emotion that was there when I was trading these charts, and it was in a you know, a flat in Brixton, and it was like watching a football match. You know, you put a position on, and it's going in your direction, and you're going, yeah, and then it's going against you, and you're going, oh no, you know, and you're going through these highs and lows of emotions. And I think that was the beginning of my journey. And right now, you know, where I am in my journey, thankfully, those emotions are very, very much under
under control.
Yeah.
And I guess when you're, like you say, you know, when a position's going against you, when you're new to the game and you've not got that experience, you don't actually realize how bad it can get and how far that trade can go against you, right? Like I remember my first trade was it was a pound Swiss long, actually.
Nice.
So I don't know why. I just stuck a random trade on. I had no clue what I was doing, and then I placed the same trade after I'd come out of that for, I think I'd made about 10 or 20% or something on the account. Again, no idea. It was just a few £100.
Nice.
I placed the second trade and it went against me, and I was down like £80. Don't ask how I remember that number. And in that moment, I remember thinking, oh, but it's okay, like, because the last position just went up after a bit. And like, looking back now, I had no concept of risk management and no concept that I had no knowledge that if, like, I could end up owing the broker money if I got margin called and didn't fulfill the account requirements. I had just no knowledge. And I guess I got away, you know, relatively scathed free. And I guess even though, you know, you blew £2,000 relatively quickly, it's still a fairly cheap lesson to learn compared to, you know, stories I've heard from many other traders who blown account. And I guess it's your adaptability to be able to look at the situation that you're in and the fact that, you know, you might have just funded an account and lost it within 2 days, and being able to go, okay, that was a me problem. That wasn't the market. It was a me issue, and being able to work on that and then build the knowledge and not just shut the door and run away. Do you know what I mean?
Yeah.
Do you agree with that?
Well, you've just covered so many topics there. I think, you know, the shutting the door and the running away is a key one, right? Because I think the trading is clearly, depending on how you go about it, again, so many ways to go about approaching markets, infinite. As a discretionary trader, I think that you're in a position where you know, you need to be able to keep going. You have to be able to keep going until you reach that point, wherever that is in your career. And that time span could be anything. It could be a week. It could be 10 years. Who knows? It's whatever it is for you. But I think a lot of people get sparked interest within the markets because it is so available now. You know, as you've kind of called out, even when I started, it was available. Before that, it wasn't available to retail traders. So there was no way that you could even access the markets. And I think that's part of the problem, because people say, okay, I can set up an account, or I can do a prop trading challenge, or whatever it is, you know, especially if they're putting their own money behind something and don't really understand what it is they're getting into, then you know, that the worst case scenario can happen, which is that you blow your accounts. But I do think, you have to keep going, and you have to keep making all the mistakes, because until you've made, what do they say, you know, an expert is someone who's made all the mistakes they can make in that field. And you know, I know I still haven't made all the mistakes in the markets. Absolutely, every day is a learning day. You know, every day is a school day. So yeah,
of course. And I think you touched upon a really interesting point there that not a lot of newer traders anyway think about, is actually how accessible is the market in this day and age, and why. You know, people will watch a webinar or a YouTube video or a series on the world's most powerful indicator, for example. They'll think that they've got the secret code to the market, and then because they can go and open a broker account within 3 minutes and have it funded with a few £100 like that, because, you know, whatever website they're on, there's usually a broker being pitched to you or advertised to you. It's so accessible to find this information and to be able to act upon it. Again, I'm unsure because I wasn't around back then in the markets, but 15 years ago, I don't know how in your face was it. I guess, like, obviously I'm sure it was still accessible, but again, you didn't have, you know, internet adverts or email advertising as such, because obviously it's all based on your cookies and your data tracking and stuff. But what was their approach to pull you in as a retail trader then, you know, in comparison to now?
I think the approach is still the same, actually, which is the, you know, the dangling carrots of you can be buying a Lamborghini tomorrow if you put the right trade on, right? So,
I wish that was true.
You know, wouldn't it be nice, right? So I think that's always been there, and that's probably always been there for the markets overall since their inception, is the fact that, you know, you can create wealth, but we have to remember it's a zero-sum game, right? If money's coming to you, if you've got a winning position, someone else is losing, and vice versa. When you lose money, someone else is winning. So, you know, it all goes into one pot, and I think that's so I was drawn into the ability to generate wealth. Yeah.
And how quickly did you? I mean, I guess this is a two-phase question. What kind of preconceptions or notions of the market and trading as a whole did you have when, you know, you first attended that seminar and you saw this price and time chart and you thought, this is amazing, I can make money just by an accurate guess or play on this chart? What notions did you have that weren't strictly true, or that you learned to be as you started trading and experiencing the emotions of actually executing a position and risking and doing all the analysis? What kind of preconceived notions went away? And I guess the second phase to that question is, how quickly did that happen? Was you a consistent loser for a long period of time, or, you know, did you pick up on these changes very, very quickly and realize that you had a lot to learn?
Good questions. I think the first notion that I've had that was, I think, inbred in me from my parents, is that the markets is a dangerous space, actually. And they had a friend who, you know, he had multiple hospitality chain, and he put everything on in one trade, and he lost a lot. So my parents were always, I think when I was a young child, that was instilled in me. So there was this fear about the markets, which is probably why I never really investigated it sooner. Yeah. And what I learned to be true was that actually is true. The statement that you can lose everything is 100% true, but it's up to you. And it's everything has to do with, as you've said, it's what you risk. And I think that's what I've learned most across the time, is that I saw a video from Paul Tudor-Jones recently, which he's saying that actually, if people just focused on the loss and the amount of money that they actually have at risk, rather than the pie in the sky thinking of how much money can you make, that's when the transition happens. And, you know, I actually always maintain on my charts now, I always make sure that I have, because I scale into positions, I always keep a running tally of the money that's at risk right now. Now that could even be worse, because obviously if you have slippage, it could be a lot bigger than what you're tracking. So I think, yeah, the lesson for me was, the initial notion was the markets are dangerous, and that preconceived conception was actually true. They are dangerous, but the way that you can navigate the markets is, as long as you manage and control your risk correctly, then you cannot lose everything in one go. Actually, I think that it's one of the safest places to be with regards to investments, because a lot of investments, you cannot predetermine your risk. It's, say if you invest in a tech startup, well, you have no idea if that company is going to make it or not. You can do your analysis, etc., but at least within the way that we trade, you can very much manage your risk.
Of course. And I think it goes back to that point that I said earlier, where it's a you problem and it's a you issue. You know, if you go into the market and you risk everything and lose it all, you know, it might have just been a bad hand. The trade might have just been a bad trade, but because you risked everything, you lost it all. And there's so many strategies or ways that a trader can manage risk, especially with these days. You know, you've got EAs that would stop you out at a certain balance level. You've got trade copiers that would do the same. You know, even so much as a strategy of, if you've got 100K of capital to trade with, like personal capital to trade with, never stick the 100K into a broker, because you never know what might happen a year from now. You just need sufficient enough leverage to put 10% in and still act upon that 10K as if it was 100K, right? So I think that's a really interesting distinction to make, is that you thought the markets were dangerous, but again, it's from a perspective of somebody who it was their problem, and they made the market dangerous because they executed with no notion of, all of this money I'm putting in, I could now go and blow in 20 seconds, you know.
Well, I think it's a really interesting point to touch on, because there is a clear distinction between being a gambler and a trader. And that's where, from a retail to pro perspective, which I know, you know, I've hit a pro status, and that's purely based on the way that I think and the way that I operate, because you know the difference from the person you were 14, 15 years ago. But that transition from assuming risk on a position and just wishing and hoping that it will, and then being excited whichever way it goes, because you don't know, the randomness, that's a casino style mentality. And I think that is part of the problem with the markets, because it is so accessible. People can come in, put a position on, maybe they win 3 in a row, and then, you know, they go really large on the 4th one and it takes them out. And I think there's a great strategy, or a simple tool. My son, he's 11 now, and a couple of years back we started talking about the markets. I've got 3 kids, but you know, my oldest, and we did this exercise, which I'll always remember, and I hope he does as well. We took out a coin. We were in a pub, and we flipped this coin, just a 20p coin or whatever it was, and we did it 100 times. And the intention was to see the randomness of how many times would it land on heads, how many times would it land on tails, but over that course of 100, what was the probability? And we had, sometimes I think it hit 25 in a row of one side. And we were both sat there just going, oh my goodness, is it actually going to play out? But the more you keep going and the more you get to 100, the 50-50 probability is there. And I think that's really important for people to, I'm saying, for myself and any trader to recognize, is that the strategy is not on one trade. It's on a multiple series of trades, and your edge will play out through that time frame. So you have to be able to manage the risk, stay in the game, and then, see the success across that period.
And I think the market has a really strange and kind of evil way of rewarding bad behavior and punishing good behavior, which for a new trader is really difficult to grasp. You, for example, like you said, somebody may have won 3 trades and then they go insane risk on the 4th. If that 4th trade works out and goes in their favor, they've just developed a really bad habit, and that bad habit is going to be extremely difficult to unlearn. And I've had frustrating conversations in the past with usually newer traders, and I'm all for people learning how to trade. I'm all for them making mistakes. But when I try and advise somebody and they've just made 100% on their account, how do you tell that person they're wrong, or the decisions and the processes that they've put in place? Like, it's a very weird notion to say, well, the market's rewarded me and it's paid me physical money that I could go and buy a car or a watch or an expensive hoodie, whatever it may be, but you're telling me that I did wrong. So how would you kind of I guess for a newer trader, how would you advise them to overcome that barrier where you are going to be rewarded when you misbehave per se? And sometimes you might get punished when you might lose 5 trades in a row, but they were fantastic positions. As a professional trader like yourself, you understand that's a probabilities playing out. And like you said, you might have had 25 coin tosses that all went the same way.
Yeah.
How would you advise a new trader to be able to see past that and keep going and trying to survive?
That's a good thought. I think really, as you say, you can be rewarded for bad behavior, and being in a position where you're rewarded for good behavior and bad behavior is a tricky dynamics, especially if your experience is short and exactly, if you've doubled your account through leveraging to the max on one trade, then you know that that's possible. And that then becomes your reality. and that's that's a great reality to have, and it would be amazing if that was a reality on every single trade. But unfortunately, at least in my experience, that's not the case. So I think it would only come from being burnt, actually, because people, as much as someone might tell you something, you only really learn when it's happened to you. And I think that's, yeah, so it's experience and time and just exposure to the markets.
I love that. I love that kind of idea of it's your own reality or your own perception, because you can't change somebody else's reality if that's what they think. So that's a really interesting point. But let's move on a few years now to the current situation that we're in. And obviously you're trading with Darwinex Zero, your ticker is ICBO. So talk to me a little bit about your Darwin, about your decision to start a Darwin with Darwinex Zero, and kind of the system and strategy approach that you have with that Darwin.
Amazing. So I was introduced to Darwinex about 4 years ago, four and a bit years ago. So I started trading with a fantastic mentor. Her name is Deanna Angelo. And if you're watching this, Deanna, thanks very much. And hello. Deanna, I traded with Deanna for about 3 years in her gold mentorship. And that was a moment in time where my trading habits became very, very professional. And I had several tickers with Darwinex, and I guess I was learning across that piece Deanna's strategy, and it was very much time based and rules based, and I hadn't learnt the element of time actually up until I was doing that mentorship, and now time is a huge part of everything that I do. So I was introduced to Darwinex through that process, and the ICBO ticker now has been created from me finally going, okay, I have got all of these different strategies that I've learned across my periods of the decades of trading, and what is it, Clint, that actually really works for you, and how do you want to approach the markets, and how does that fit within my lifestyle? So I can trade, swing and intraday. I don't do positioning trading, long-term tradings for months. My overall strategy really is I want to capture the full range of one particular time period. So the best outcome for me, my key objective is to go, okay, if I can take the low of the month and ride it all the way to the high of the month, or vice versa, then that's a brilliant month for me. And I will then look to scale in across that period. And that's where I've seen the most success for the strategies which I'm trading. And I say strategies because it is a portfolio of strategies which we trade. We trade one market, just gold. At the moment it's spot, so XAU of USD. And that came about through my time with Deanna. We were trading gold and oil. And actually, what I found quite interesting, just to mention, is that previously I was looking at 50 instruments at any one time. Now I look at one, and there's a period in a trader's career, I think, where that happens. It doesn't need to happen, but it might happen, especially a discretionary trader. So yeah, going back to our strategy, you know, what I do is look to capture the full range of one time period, ideally a monthly range. But then I look at the weekly and the daily range, and I look to get in at the bottom and get out the top. Now that doesn't always happen, but that's the objective.
Well, I guess if you're approaching it with a swing and an intraday basis anyway, I guess your swing move is, or would be, the start of that monthly candle to the high of the monthly candle, or low, whether you're shorting. But then obviously there's no rules against you taking intraday positions, i.e. if gold has a pullback and you're looking to long it to a monthly range high or something, you're able to get in on a daily basis as well, I would imagine.
Absolutely. I think it's very difficult also to you know, as a trader who is trading both ways in one market, you need to be very nimble to be able to do that. Especially if you have a position long, a swing position long, let's say, and then you're going short on an intraday to hedge the drawdown, then you need to be able to have some skills to be able to do that. I think actually often the best way and the best strategy is to consistently maintain one directional bias, and then scale in on that. And that's where we've seen the most success. But also, actually, we've seen so gold is obviously making all-time highs and has done for the last
somehow it's
6 weeks
every day.
Just keeps on going, right? And you know, I was shorting gold in February, so I had a full directional bias that she's going down, and that was based off of some fundamentals, and also off a lot of technicals. I'm primarily a technical trader, and the beauty is both Matt, my advisor and business partner in the funds that we've set up, we both looked at each other at the end of February and said, "Wow, you're down by 0.05, and you were shorting, and gold was making new highs. That's just amazing," because we were able to manage the risk in the way that meant that we were at scratch, basically. I looked at the month and I thought to myself, well, hold on a second, we should have been longing. Why, you know, but yeah, anyway.
But even so, I guess having such a directional bias that is so incorrect for, you know, an extended period like a month, to come away barely unscathed is fantastic, and is something that is kind of where I believe a true professional stands out. Because a lot of newer traders would they would go until revenge trade, you know, stick to their bias, add to losing positions, not hedge against their original bias. And I think that's a recipe for a disaster, I guess, if you don't know how to minimize that drawdown and how to minimize your risk when you are so wrong on a position.
100%.
You know, because a lot of people would add to a losing position in hopes of, my bias is short, we are at all-time highs. So, you know, I guess I say this now, gold, it just keeps making all-time highs, but from a logical perspective, the more upside to your P&L is if you're shorting, right?
Yeah.
Because you don't really want to be longing into price discovery, because you don't know how far, could go a pip or a point, it might go 1,000 points, you never know. So I guess the best risk to reward is to the downside. And if you're so fixated on that, it's a one-way ticket to blowing an account.
Absolutely.
But talk to me about, so you now primarily focus on gold, which I'm pretty sure you've been doing for about 4 years, because you was talking about your mentorship, and that's where you really studied gold and oil and stuff.
That's right.
And you've kind of really honed in on that. And we can talk about your fund as well in a second, because I'm interested to hear some more information about that, and I'm sure the viewers are as well. What was that like, going from trading multiple assets and potentially seeing these, you know, these huge swing movements that you could capitalize on a weekly basis? Because I'm pretty sure, even though now you might be more active intraday, when you're trading 50 assets, you feel like the market is always moving. So how does that transition take place, where you go, I'm going to put all that to the side because it doesn't benefit me, and I'm really going to focus on one and build your future as a trader and as a fund manager just purely on gold? How does that kind of come to fruition?
So it started with the mentorship, but if we go back to other strategies that I've seen a strategy which is 1,000% return on a year. and this guy is phenomenal. He trades a 40 FX pairs. He has maybe 5 setups in, and he trades all of those setups across the 40 FX pairs on a 4-hourly chart. And I was just mesmerized by this strategy.
So he's extremely busy, is what you're saying.
Oh, well, every 4 hours he'll sit down, scan, and then go, yes, take that one. And, and the it's always on a 1:2 risk to reward. Absolutely ruthless about that. There's no, it either hits the target or hits the stop, no problem, and it works very well for him. So I think it was hard for me to make that transition, where I've seen, again, based on my experience and other people's experiences, I've seen that you can achieve huge success with so many different instruments. And in fact, Matt, my partner with the fund, he had set up a fund previously where it was robot based. It was all scripts, and they were trading 40 assets. So it's absolutely doable. But for me, the transition really was the mentorship, and then seeing that specializing has lots of power. There's a Bruce Lee statement, I don't know if I've got it correctly, but he says that he doesn't fear the man that has practiced 10,000 kicks once. He fears the man that's practiced one kick 10,000 times.
That's my favorite quote of all time, that is.
And I think there's so much power in simplicity and extraction, taking things away rather than adding. And that's where, there's another Warren Buffett's video, which I've seen recently, where he's talking about you have to be like a, I'm not a baseball fan, but it makes sense to me, where if you're the batter and someone's pitching, you just wait. You just keep waiting until the ball is right in your sweet spot. Then you swing. Until it's in your sweet spot, you leave it, you ignore it. And I think that takes a lot of discipline, especially as a discretionary trader, when you can, no one's controlling you, right? You can make whatever decisions you like. You need to be able to understand your circle of competence, I think is what he calls it, and just staying within that. So for me, I found a lot of love of simplifying and specializing. And again, another quote which I love is from the movie The Last Samurai with Tom Cruise. And he says, from the moment they wake, they devote themselves to the perfection of whatever it is they pursue. And I think that's the whole point. You need to go, okay, this is what I want to pursue. This is what I'm going to focus on, and I'm going to become a specialist in that. That's easy for me to say when I've had such a broad career, right? I haven't been specializing for my life, but now I am. The rest of my life is focused on mastering the gold market. Simple.
Nice. I love that. And so before we go any sort of further into more, I guess, strategic based questions, I want to talk a little bit about your fund. Well, I want you to talk a little bit about your fund, because I think right now it's super relevant with what we're discussing in terms of you want to become a master of the gold market. And obviously, I know that you're building a fund and you've got a huge vision for the future. So how does being that specialist and that expert in that field, how does that benefit you as a fund manager? In fact, before we even tackle that question, that's sort of phase 2. Talk to me about Kalaya Capital, your vision for the future, and then becoming an expert in the realm of gold trading and how that benefits Kalaya.
Yeah, thank you. So Kalaya Capital was set up in December of last year. It's a fund that specializes in gold, and we target 20 to 30% return annualized with sharp above 2. That's what we're working to achieve for investors. Now, I set up Kalaya Capital after setting up the ticker with Darwinex ICBO, and I think in the 3rd month in November last year, I landed a number 8 position on the leaderboards. Didn't finish there at the end of the month, but made it into that space. And that was a moment in time for myself that I recognized, Clint, it's time to really focus on what you want to do in life. And that's when I said, okay, let's set up the fund. So so we have now been trading for 8 months, and across that period generated above 15% return, and working, you know, to achieve the 20% return within the next quarter, and then moving into gold. And I think just quickly, the trajectory that we see for Kalaya Capital is very much baked into the service offering of Darwinex. And I think that's where there's some really interesting conversations, because, you know, as a trader in Darwinex, everyone, whatever people are doing, I think is as long as it's good for them, it's good for them, right? For me, what I've seen is that Darwinex provides a huge opportunity for traders to really enter the professional market. And I think that's an offering that I've not seen in other companies. It may be there, but I've not found it. The ability to go from a silver tier, which I think is a great tier to start at, into gold, and then into pro, and in effect have a hedge fund as a service, fully regulated, and, you know, under an umbrella of a Darwinex vanilla product offering, is amazing. And we want to, you know, leverage that opportunity as much as possible, and our plans for the fund are baked into that. So we're currently in silver, and we want to be in gold within the next quarter. I think we've achieved the 8 months track record. We need to get to the 20% return. We want to then start to generate some third-party capital and interest from investors, and then we want to move into pro, Darwinex Pro, and run the fund effectively for a period of time to generate the investment opportunities that we're wanting to offer to the market.
Okay, perfect. So you see Darwinex as not just a short-term, I'm going to build a track record, I'm going to try and get allocation and utilize all the metrics that they offer, but you actually see Darwinex as a, you know, even though it might not be for the whole life of Kalaya Capital, we're at least going to be an integral part of, you know, the beginning of your journey as a business and as a fund, which for me is super interesting, because we'll get to see you grow. We'll see, I mean, you're so close to hitting gold. You've ticked all the metrics. It's just the 20% return, which I know we spoke about before. Yeah. And you said you had to get a little bit ballsy to get to that sort of 20% mark. But I mean, I disagree, really. I think the consistency that you've shown ever since starting ICBO, you kind of don't need to change a thing, because you're well on track to achieving gold, and then, you know, moving on to that next phase as Kalaya Capital and where you're headed. You know, touching back on the fact that you reached number 8 spot in Darwinia, which is fantastic. Your score, you always end between 100 and 200 roughly. And the consistency there, I mean, I was looking at it before we jumped on, the consistency is far better than having, you know, one month where you've finished first, second, third, for example, and then 1,000th, 2,000th. The consistency that you have is phenomenal, really.
Thank you.
For lack of better words. So I commend you on that, because I know you said when you said you hit 8th and you was like, but we didn't finish there. But I actually think the consistency is what's really important with your record. You haven't got to be number 1, because number 1 isn't always representative. And I mean, I'm not taking into account a lot of things here, I guess. And I'm not saying that somebody who's finished number 1 isn't a fantastic trader.
Absolutely, yeah. Well done to everyone who's
exactly 100%.
100%.
But I really do think it's commendable, the fact that there is not much variance in, you know, where you finish on the Darwinia leaderboard each month, even as the amount of Darwins that are competing grows. Yeah. There's a little variance, you know, so you know, once again, that's commendable to you. But reverting back to my initial question when I brought up the fund is, specializing in gold and becoming an expert in that one market, how do you see that as a USP for the fund? And when you're pitching to investors, do you think that's a special thing because you're giving them that security that you are the expert?
Absolutely. I think that, again, funds have multiple strategies, and if we revert back to the, you know, maths and my business partner's previous track record, so he had set up a fund and ran it from £10,000 assets under management to £20 million assets under management, averaging at about 2% a month with a sharp above 2 for that period. So very successful funds, and it was all automated, all robots based. And that was across 40 different assets. When I mentioned to Matt that I want to just do gold, nothing else, just focus on gold, and we had a great conversation around it, he said to me, Clint, it's actually amazing, because as you start to grow in the level of assets under management that you attract, especially with institutional funds, the diversification, they want to manage themselves. So they want to be in a position where they can say, okay, here is a, you know, so if I'm a fund of fund and I'm looking at Kalaya Capital and it's saying, okay, we've achieved 30% for the last 5 years just trading gold, then they can say, okay, now gold allocation, we want to have a conversation with them. So specializing is going to be excellent just for that alone. But also, I landed across a let me see if I can find it. Yeah, it was a Financial Times article a couple of weeks back, and it says commodity traders are sitting on up to $120 billion in cash after years of record profits. And so this just was smacking me in the face, and I was you know, really, I was thinking, oh my goodness, that's a lot of money, right? And then and then, you know, what are they going to do with it? What are they going to invest in, etc.? And quite an interesting article. But one, I've captured a snippet of it, and it says that the most successful traders are either the biggest or dominant in a particular area. And I think that's what we see as the value for Kalaya Capital. We intend to be one of the biggest and one of the most dominant players in the gold space. Now that's obviously highly ambitious for you know, the position that Kalaya Capital's in now, but that is the vision of the company. So specializing, I think, for us is of absolute paramount importance, and you know, that's what we're going to do. Gold is such a highly liquid asset. You know, the slippage on it is low, so even if you're doing, you know, high frequency trading, etc., it's a great asset to be. Yeah,
and you know, it's stable enough that it won't fluctuate too much. So I guess if you're achieving 30% per year, trading it both ways, as an asset that you can invest and hold, or allocate that capital to somebody like a specialist fund like yourselves who will trade it both ways and generate returns. Whether, I mean, we're talking about it now, it's in all-time highs, so there might be some people who go, well, I'll just buy and hold. But as soon as that starts slipping and coming to, you know, lows from last year, the year before, that's when it becomes a little bit more prominent, I guess, that actually we need a different strategy to trade this market, or to invest into this market that isn't so reliant on, you know, number goes up, if that makes sense. And because obviously gold is so determined as an asset by the economy and the macroeconomic situation that you're in at the time, and inflation and interest rates, because it is such a safe haven asset. And having the ability to invest into it, regardless of whether the market's at highs, lows, bearish market, bullish market, is something that every investor would strive to have access to, right?
Yeah, I think so. And, you know, precious metals, obviously a fantastic space to be in. And exactly, if we are currently tracking, at least as the period to date, you know, Kalaya Capital is tracking higher than a continuous contract in gold. And that is my personal benchmark, is to always be above if you were just holding on the assets. It's a lot easier if gold goes down, but you know, at the moment she just keeps on going up. So
I guess this is the test year, right? This is when gold is continuously breaking all-time highs. If you can still outperform that, it's because it's usually people benchmark against the S&P, right? And can you beat the S&P, which again, in a bull market, for the majority of traders, it's really difficult to do. I know that sounds silly because it might be 10-20%, but that's still hard as a professional trader, especially when you're trading at size, to make 20% per year. But you know, it's more relevant for you to benchmark against gold, because like you say, people or other funds will go, we have, you know, $20 million allocation to the gold or precious metals market. Let's allocate that over here. They're not looking at the S&P per se. They would compare it to actually investing and buying and holding gold. So
yeah, exactly. And I agree. The S&Ps are great. In fact, just to mention, we are currently tracking at this point. We're currently tracking higher than the S&P, at least for March as well. So as a the performance that we've achieved. So we're very happy with that. But I think the our future within Kalaya Capital, in my mind, it's the business that I will be doing for the rest of my life. It's that simple. So, I'm so happy to be part of that and to be offering it as an opportunity for investors to participate in.
I love that. I mean, I know from conversations that we've had in the past, and then hearing you talk about it now, I can really feel the raw passion that you have for it. And it kind of feels like, looking at your experience before, where you was talking about your work history and stuff that you do. I mean, I don't know whether you've said these same things about being an architecture or working in tech startups, but I genuinely feel like you are committing the rest of your working career towards improving what you have now. Because this is the great thing about trading, right? You've got the skill. Now you don't have to go and learn new skills. Realistically, it's all improvement on what you have now.
Absolutely.
And if you're already performing well, it's kind of, yes, you'll have bad periods, you might even have bad years, but realistically, your growth chart is always going to look up.
100%. And I know when, conversations I've had with masses, just look, mate, I'm making mistakes. I'm making lots of mistakes right now, and we're still achieving the outcomes that we're achieving. So each time I take a mistake away and never make that mistake again, the performance will increase. And that's part of our trajectory with the fund. Is we're raising capital as we speak, and that's specifically for OPEX costs. That's not for assets under management, just to be clear. And that money will be utilized to bring in quants, so that we can take the strategies which I'm deploying and really start to put them to the test. So yeah, that's we want to optimize. We want to take everything and just make it better and better and better. That whole sort of Kaizen approach, every day, just keep making it better.
I think there's a couple of interesting points actually. There is and again, I'm going to pose this as kind of a two-phase question. So the first point is, you're talking about bringing in a team of quants and really kind of systemizing the approach and figuring out the best optimizations that you can allocate to these systems and the strategies that you're deploying. I guess this is something that, again, newer traders don't really think about in too much detail, because they might think, I've got a system, now it's just about scale. But you'll know as well, running a fund, that when you hit a certain level, systems will have things like alpha cap, where you start to experience high amounts of slippage, or your P&L will reduce, your drawdowns will become bigger. And having a full quant team to be able to forecast these issues before it happens. I mean, Darwinex does a lot of that for you anyway with the metrics it provides, but having a team to work on, building and adapting these systems to account for, potentially we've got a 30 million alpha cap, we're at 27. We need to figure out somehow how we can manage the portfolio as we grow past 30 million, because obviously you've got big aspirations for Kalaya Capital, and you don't want to be bound by these alpha cap restrictions, or whether a system just loses its alpha over time and your edge sort of diminishes. I guess the first part of the question is, how do you plan on utilizing the quant team to analyze the metrics and build the systems forward? And then we'll come back to the second phase. So I think that's quite a deep question, actually. So how are you going to utilize a quant team to reduce exposure moving forward and increase profitability with your systems?
So exactly, it's reducing the risk profile and increasing the performance. That's the outcome. That the requirements for the quants will be really clear. We're actually going to target a 10% a month with a Sharp of 2. That's going to be the targets, and then we know that we'll achieve 20 to 30% a year. So we want to take everything that all the strategies, and if we take it, so gold as one highly liquid asset means that if you were to deploy a portfolio of strategies into that market as a fund, then you have a wealth of opportunities to be able to, abundant opportunities to be able to generate the edge on those strategies, to be able to see the edge play out on those strategies. So that's what I want to be able to do with the help of the quants, is to be able to basically take I don't have skills in that space whatsoever. So I have, I don't understand how we could do it without the help of the quants. Maths does, and that's fantastic. But we want to basically say, okay, here are the strategies. Let's backtest those over the last 20 plus years. Let's then Monte Carlo test those into the future. Let's then bring back all of that data and replay it back into the charts on the screen. So I want to be able to see the probability levels of a particular trade and a particular setup on the screen, what I'm looking at, to then help me make the decision at that point in time. And that for me will be the first step that we want to achieve. And once we've achieved that, then we'll start to see what that looks like in live trading, and then we'll work to continuously edge test it and optimize it, on a monthly, quarterly basis. So I've seen this sort of play out with with some of the content that I'm involved with, and it's phenomenal. If we can achieve that, then our performance will increase dramatically.
Perfect. I guess the second phase is super relevant now, because talking about, making these small adjustments and having the quants come in to do it. I guess more relevant to you, you was talking about when you make a mistake, you then, take it forward and you won't make that mistake again, for example. What sort of processes do you have in place? And the reason it's relevant, because I'm guessing this is something that you'll bring forward when the quants come in and they start looking at the systems. You are going to make mistakes. It's just the world we live in. How, or what is your process to overcoming the mistakes, logging the mistakes and reviewing them, so that again you never experience that again?
It's really good. Journaling is key, and I think as traders it's often something which some traders are brilliant at it. They will journal by very nature, and some aren't. I'd probably sit somewhere in between. I'm not someone who loves to journal consistently, but I force myself to journal and make sure that I'm capturing everything that I'm doing. And that helps me to look back in time and say, okay, you build up a portfolio of your own charts and the decisions that you've made. There's something which is really interesting, which I think is worthwhile for everyone to do. It hits you smack bang in the face. If I trade on MT5, and I'm sure whatever platform people are trading on, it's able to be done. But if you just hit show me all of my trades on the chart, like actually, all of the positions that I've taken, and go back through all of them and ask yourself the question, what was I doing there? Was that trade even in the playbook? Was I taking one that was completely off piece, etc.? It really starts to you can stare it in the face, and it can look at you in the same way, and it becomes very clear as to what went well, what didn't go well. And that's what I do, is I literally look at the positions that I've taken and go through it, and I'll do that multiple times. So even right now, I think we're at like 600 trades in ICBO. I review those. I actually show them all on the chart, and I'll go through them and work in my own brain to understand, what was it that led me to make that decision at that point in time. And I think trading is, as a discretionary trader, it's all about decision making, right? So that's all it is at the end of the day. What decision, how much do you put on? What direction do you go in, and when do you get out? When do you take the trade? So yeah.
And it's very easy to look at, you might be using bar replay on TradingView or soft FX or whatever it may be to backtest your edge over an extended period of time, but nothing quite represents, like you say, that decision-making process real time. And if you've got 600 trades that you can go back and review, you might not feel the emotions then, but if you see something that's really out of character for what you usually do, even if it might be, let's say on average, you capture 30 points on a winning trade and you've captured 300 points, it was probably a great trade, and you laughed all the way to the bank. But looking at that data right there, that something was different on that day. And I guess going back to the journaling, if you've got a journal, you start to build a picture of who you are as a trader, as opposed to, let's say you was teaching me now, you could tell me everything, doesn't mean I'm going to be able to go and execute it. You could tell me all your mistakes, doesn't mean I'm going to be able to avoid them. But when you build this encyclopedia of your own trades, your own emotions, everything that you've learned and experienced, it's kind of, I guess, because I review my journal as well, it's worth its weight in gold in terms of knowing where you are now, where you come from, and seeing that progression.
Absolutely.
You know what I mean? And I guess like I review mine fairly infrequently. I know we had a chat about this before, and I also said I'm pretty lazy as a trader. I probably don't do it as much as I should.
Yeah.
But how often do you actually sit down and look through these trades, and how frequently do you do it in terms of, do you look at the trades once, twice, 3 times before you mark it and go, okay, I've understood everything from that position and how I felt in the moment?
I look at it once a month with the positions on the chart to see, okay, what actually happened that month. And I don't do it daily in the actual position. The reality is, in all honesty, I'm doing it every second of the day. Actually, that's the reality. The reality is that, you know, as I think making decisions in front of a chart, and you can make lots of decisions away from the chart as well. So you come to, especially when you're focusing on one asset, you come to a position where, you know, in your brain, the charts are in your head, right? And you can see, okay, I entered there, I got out there, that was an error, or that was amazing. So I've already played over those positions multiple times mentally. But I think the process of actually taking it that moment in the month, you know, when the month is closed, to look at the charts and go, okay, what happened, what went well, it's critical. Daily is better, and ideally I should be doing it daily. I don't, in all honesty, but that's on my plan to make sure that I do it daily, but at least once a month.
Of course. And I think that, like you say, the more frequent that you can do it, the more you're going to learn, essentially, because again, it's your own encyclopedia of decisions, emotions, trades. So being able to have that data to hand and review it frequently, it's always going to benefit you kind of doing it on a day-to-day basis. I'm the same as you. I get busy and then my kids get home, and you just get distracted. And I think not everybody has to do the same thing. Not everybody has to follow the same process. Obviously, the more is better when it comes to journaling and reviewing, obviously, but it doesn't mean that I have to do it the same amount as somebody else, because it might not work as well for me. So I think that brings us nicely, if we kind of circle back to you as a trader specifically. For newer traders, I guess they one of the big struggles that they have is in early into their journey, not necessarily the process of getting onto a chart and clicking buy or sell, or even analyzing, because you could probably teach somebody in 10 minutes basic technical analysis and they could go and execute it on a chart. But one of the things, and I know this from many conversations, is people struggle with routine and process. So what do I do at this time of the day? When do I get to my chart? I work a full-time job. How do I, you know, trade around that job? So I guess the question I want to pose to you is, what does your routine look like on a day-to-day basis as somebody who is, you know, now, like you said, a professional trader, somebody who was looking to scale up and really dial in on trading gold and becoming an expert? What does your, and you can be completely honest, if you wake up at 10 a.m. and you rock up with a coffee, like, that's fine. Kind of want the rawness, because again, I think new traders have this romantic view or belief that, again, you might wake up, go turn your Lamborghini on, take it for a spin, come back, sit by the pool. And when really in reality, we both know it's not like that.
No, no. I mean, maybe for some people, but definitely it isn't for me, that's for sure. Yeah, my daily routine starts, actually, the first thing I do is I go for a walk. That's the very first thing I do every day. Actually, wherever I am, I'll go for a walk. And I think going for a walk, for me personally, is such a great way to start. You get the body moving, you get sunlight in your eyes. I often play music, or I'll listen if I'm in the park or wherever. There's always birds singing, you know, so you have that nature sound as well. And I think just that whole process, and I start to think about the day. I start to think about, what have I got on the pad today? What's most important in all parts of my life, and specifically with the markets. I may have looked at the charts. I probably have before I've gone for the walk, but I don't have needed to. I've definitely looked at them last night. And my brain will then be thinking, okay, what news have we got on today? So the strategies which I deploy they're not reliant on news by any means, but the expansion in the gold market will definitely be easier after high impact news. So part of my, on a weekly basis, I'm looking at the economic calendar and establishing when those news events will be. And that becomes a kind of stake in the ground as to, okay, we can expect this type of signature in price to take place on this date, perhaps. So on my walk, I'll be sort of reviewing that and just mentally, just kind of thinking through, okay, and then also planning how I'm going to approach the day, whether I'm going to trade. Some days I won't trade. Today I'm unlikely to trade. It's a Monday. First news comes out on Wednesday, so I'm looking to see what happens today rather than taking a position, and that process sets me up. Then I will come back and I'll do it's a walk and exercise if I'm exercising that day. So I'll exercise Monday, Wednesday, and Friday, and Saturday, but I'll walk every day. Then I'll come back. I'll either exercise or not. I'll have some food or some breakfast or whatever it might be. And then actually I come to the charts. So I won't have showered first. I'll come to the charts first. And that would be, I look to be in front of the charts by at least ideally 7:30, you know what I mean? 8 o'clock at the latest, and saying, okay, what's printed in Asia? What's actually happened? So we look at the intraday profile of the Asia range, and then looking at the other higher time frame sentiment that's in play and the levels, the points of interest, and I'll then say, okay, what is the likely setup that we could anticipate for this day as part of this week? So the weekly profile is going to be important as well. And with that in mind, I'll then make a decision as to, is there a position now that I should be considering? And if so, then I will bunker in and basically be in the zone. Or if there's not, then I'll continue with the rest of my day, and I'll shower and get ready and then do whatever else I might be doing for the day. And then I'll come back to the charts at the time that I'm expecting something to happen. And I think that's kind of critical for if I like to approach this conversation, these types of conversations, as I was speaking to myself 10 years ago, you know what I mean? And if I was chatting to me then, I'd say, Clint, time, such an important part of the markets, at least for how I approach it. So, the idea of just when you're in front of the charts is a great time to take a trade, that's gone for me. It's so easy for people who are just starting to think, okay, I'm in front of the markets, I think she's going up, or she's going to take a trade and then go and catch a train to work, and then you're watching it and whatever. It's like, no. If it works for you and that strategy plays out, great. But yeah, so I use time as a critical element. And then the trading day begins, so it'll either be, I'll either trade the London Open, the New York Open, or the London Close, or the New York Close. That's what I'm looking at. And depending on the news release for the day, I'll take a position and then manage those positions. We may already have positions on. So if the month is going very well and I'm scaling in, then I'll also be looking at those positions, seeing if there's is there any risk that I need to take off based on where the price is at, etc. And then it's just about working to ensure that I'm making the right decisions throughout the day. Yeah,
that's wonderful. The route, it's very similar to mine actually, your routine, which is really interesting. But I think that the best kind, or the biggest golden nugget that you put in there, which again for newer traders will be fantastic, is the first thing that you do, especially when you're thinking about the markets and how you're going to operate for the day, you're actually not at your desk.
Yeah,
you're in a completely different environment. Like you say, you've got the sun hitting your face, you've got the wind blowing, like you're in such a tranquil environment in terms of you're not thinking about, well, you are thinking about work, but you're not visually looking at work, because we all know that the emotional response usually comes from candlesticks or news releases and what have you. And I guess the reason it's such a great golden nugget is that when a newer trader has that emotional trigger, they usually act in the moment.
Absolutely.
So they're visually looking at, you know, a chart. Let's say a huge 5-minute candle goes against them and they pull the trigger on exiting because they're staring at that visual cue. Because if they remove themselves from that environment and go and do something like it, whether you do it consciously or subconsciously, you know, going for a walk first thing while you think about things, I don't know. But, and I guess that's a question you can answer, but being able to remove yourself from the environment and make a decision somewhere else where you don't have the audio or visual cues triggering that emotional response. So do you do that as a conscious thing?
It's you're 100% correct. There's a statement that someone said to me, or you know, picked it up along the way, which is that we make our best decisions away from the charts. And I think that is highly relevant for when, you know, clearly if you take a market order, you need to be in front of the charts. If you're doing limits or stops, great. But you know, I typically take market orders, so I need to make the decision in the moment, or limits. But I think, you know, the ability to know that you can just step away, you know, you don't need to put that position on or take that position off, rather. You know, a lot of emotions that pop up is the idea of you're in a winning trade, but you fear that you're going to lose the profit that you've already got, you know. So yeah, I think the ability to just go, you know what, if I've got a stop loss on, which everyone should have a stop loss on, then you know, if the trade is going to take me out, I've already predefined my risk and let it be. I've already said that's where it would take me out. So walking away and just replaying everything in your mind is massively powerful. So 100% agree with that.
And do you have any kind of other strategies or systems that you use personally to kind of keep those emotions in check? Because I don't care how, I know you're a discretionary trader, but I don't care how mechanical a system is, or whether you're trading using an EA, or whether you've got 30 years experience. It's human nature to feel an emotion. And so me personally, I don't believe the emotion goes when trading with experience, but I think you find ways to manage it. Nobody likes losing a trade. Nobody likes losing money. Being able to manage your emotion and composure when that happens is a different story. So do you have any specific kind of things that you do, either when you're in drawdown or when you've taken a bad few trades or what have you? Or is it just kind of natural to you to continue pushing on?
Yeah, no, it's a great thing to bring up. The short answer is I'll share with you, and I've got this here, and actually, just to make it really clear, I have this book on my desk, irrespective of if we're doing an interview or not. It's here, it's on my desk, and that's purely so. And this is the best loser wins, right? And there's some. This is Tom Hugard, I think. Fantastic book, and that is the one book which I would recommend to myself 10 years ago. I would say forget about any strategies, nothing. Don't even talk about how I'm going to take a trade. Read that book from beginning to end. Read it twice, read it 3 times, and really score it and understand it. Because going back to your question, what I do is actually at the very end of the book, Tom has some suggestions, which if I'm you know, recalling them correctly, number one is that he will always assume that he's wrong. First off, very first thing is that this trade that I'm taking is going to be wrong. Now that sounds counterintuitive, but if you put that mindset on, it then means that the risk that you take is going to be sensible. Because if you think that this is the trade and this is going to be the winner, and then you put everything behind it, and then she takes you out, well, you've just made a mistake that you're going to have to face into. So assuming that you're wrong, first and foremost, I think is great. Then, and these are the strategies which I deploy for you know, to manage my emotions. Number one is that. Number two is actually then only adding to a position if it's working in my favor. If the market agrees with me, I'll add. And that's the beauty of scaling in to the position. And, you know, obviously knowing how to do that it comes with time, I think. Never adding to a losing position ever. It's so easy to think that, you know, okay, she's cheaper or, you know, higher price when if you're selling than previously, and this is a great place to get in. I don't do that because I think that's just having those sentiments in place helps me to make sure that, you know, I'm operating correctly. And then also, you know, Tom also says that expecting to be uncomfortable, actually literally, and again, going for my walk, I do that. I will play through in my head, okay, if I take this trade today, because I'm already expecting what I think I'm going to do in the day whilst I'm walking. If I take this trade and it goes against me, how's it going to feel? You know, how's it actually going to feel if she's going against me? And then if she's going with me and I then need to add in and scale in, how's that going to feel? And just actually playing that out and visualizing that helps that in the moment when it's there. And you can feel it, of course, if you're assuming risk on a position. And the way I'm assuming risk mentally is that this is a fund, and actually, you know, I'm trading like I have 100 million pounds capital in the assets under management. Then you know, you want to be able to go, okay, I'm operating correctly. So, and then the other fun one is I have this.
Out of anything that you was going to pick up then, I had no idea it'd be a clownfish.
And this comes, I'll whack myself in the face, literally. I'll pick it up and slap myself with a cold fish. Good old Nemo. And that's if I'm doing something stupid, it's my trigger to say, Clint, no, stop. And then also there's another great thing behind the fish, which is that, you know, to let your emotions go on what's happened in the past, right? We have to be, what's the opportunity in the present? And if we're consistently, you know, revenge trading comes from, I was right, let me get that money back, you know, and then you're doing it wrong. So the position to, and that's also come from this book where he's talking about Tiger Woods. The fact that Tiger Woods can rock up to a hole and completely forget what happened on the last hole. Apparently, that's one of his great skill sets. I think is hugely valuable as traders. We need to be able to do that.
Yeah, 100%. I mean, that's such a fantastic and detailed answer, everything that you said there. But that specifically is huge, because if you can't let go of, you know, past mistakes, or, you know, whether it's just the last trade or the last few trades. I mean, I personally, I had a drawdown period that was 12 months. And instead of going on to, I mean, I was going through personal issues at the time, which amplified everything, but I still stuck to my routine day in, day out. I stuck to my risk management. Eventually came out of that drawdown and had the biggest growth period I've ever seen. And it's kind of that mentality, like you say, like Tiger Woods, of being able to turn up day in, day out, or hole in, hole out, whether you've just had your rear end handed to you by everybody else, and you see all these people performing really well and you're kind of stuck in a hole, being able to stay focused on what you can control and what you can do, and keeping those emotions. But I mean, I'm probably lucky that didn't happen too early into my journey. It was quite late on. So I had that emotional stability, which, you know, personally is great, but it's always interesting to kind of hear what other people do, because at the time I really didn't have any processes. It was just, oh, this is natural to me. Just don't be an idiot. Do you know what I mean? I wish I'd have had a fish to slap myself.
Yeah. Yeah, it works for me. The fish, yeah.
But circling back around, I think we are coming to the end. If I look at the time, so I'm going to ask you one more question that I think is going to be really, really valuable. And it's kind of expanding on what we've just spoken about anyway, is if you was talking to Clint 10 years ago, or if you was talking to a brand new trader today, what's 3 pieces of advice that you would give them in the hope that, you know, they are going to have a long-standing career like you?
Number 1 would be manage your risk. Number 1. And that will take time, but managing risk is paramount. Number 2 is find what's right for you, because the reality is how someone else trades. You have to learn other systems, clearly, because, or you might be brilliant enough, and I mean that, that you've established a system that works, and you've come up with it, and it's the first system you've ever seen. Happy days. But the second point is always stay true to yourself, which is some advice my dad gave to me when I left Australia, and that's so true in trading. You have to stay true to yourself. So yeah, risk management, stay true to yourself, find what works for you. And number 3, just keep going. Just keep going, because
Or just keep swimming, as the fish would say.
exactly. If you love it enough, and exactly, it's not so much love for the markets, it's love of whatever your process and your method is, that will develop the success in the markets. That just keep going, don't stop, just keep going.
I love that. That's actually something that I say to a lot of new traders is there's a fantastic quote, and I'm gonna paraphrase it because I don't remember the quote exactly, and I say this to a lot of people. It's from a book that's called something like The Dog, the Horse, the Boy, and another animal. I can't remember what it is. And have you heard this quote, by the way?
I haven't. Go for it.
So the boy and the horse are stood at the start of like a huge grass field. The grass is sky high. And the little boy says to the horse something along the lines of, "I can't see my way through. I don't know how to get there." And the horse says, "Can you see where you would put your first foot?" And the boy says, "Yes." And the horse says, "Well, just take that. Don't worry about the end. You know, just take your first step and you'll get there." And that's something that I always tell a lot of people, because it's such a vast landscape of things that you have to look at. I mean, even today, there's so much that we could have spoke about that we would be on here all day. You know, there's fundamentals, there's technicals, psychology, risk management, networking, knowing, like, understanding yourself. There's so much. You're never going to master all that on day one. So just take the first step, and then take the second step, and take the third step, which is great, because that's exactly what you was talking about, and just keep going.
Yeah, 100%. I love that quote. And it's so true, right? The world will open up for you in whatever your dreams are, as long as you just keep going. You know,
you're never going to be, if you want to become, a heart surgeon, you've got to go to college, university, and you've got to learn from day one. You're not going to be able to do it on day one. You take the first step. Same with trading. And this is the problem, actually, probably running over time, but I don't care, because I think it's really important. Circling back to what we were saying at the beginning, how accessible the market is for you. And, we see these people on social media and kind of the industry and how it's presented. We see that as, I can do this from day one because I now have an account. I have my trading view. I have my MetaTrader. I have everything that a professional trader has, so I can execute and make money. But in reality, as well as anybody, it's not quite like that, right?
No. And I think what people should remember is that everyone is up against themselves. Actually, that's the number one thing, is, you're not fighting against the markets. You're not fighting against other funds. You're fighting against yourself. But there are lots of other people and lots of institutions out there who are working to make themselves as strong as they can be, and we need to recognize that. And that's that's in effect what we are up against. So yeah, but the way you win is by working on yourself.
100%.
Yeah.
Well, Clint, I guess we're going to wrap it up here, because we've probably gone over from what we should have done, but we was talking about such great things that I didn't want to stop. I just want to say a massive thank you for coming on and speaking to us anyway. You've dropped some gems, as I knew that you would. Your perspective on a lot of things is fantastic, and I am really grateful that you are the first person that I've been able to record with.
Amazing.
And sit down and have one of these conversations with. So I will drop everything below in the video description, all your links, link to ICBO, any social media profiles that you want me to share. But do you have any final thoughts to share with the viewers before we wrap up?
Well, thank you so much to yourself, Kieran, and to Darwinex. It's an absolute pleasure to be part of the community, and so nice to have this conversation. As you say, we could be chatting for days. For me, no. The one thing is, thank you to everybody, and absolutely, if you would like to learn more about the fund and what we're doing, then please get in contact. The best place to contact me would be through contact@Kalaya.capital. And I'll welcome any and all inquiries, and look forward to hearing from you, and look forward to meeting people that are on this call. So thank you.
Amazing. We'll drop that email below as well, so everybody has access to it. Well, Clint, thank you. It's been a pleasure, dude.
All right. Thanks, mate. Enjoy it. Have a good day.